So I want to say welcome. Thank you guys for joining me as I take you through LEY Capital, where we make loans convenient. All right. So my name is Rick Charles. I know I got some people joining in right now, wanting to take a listen and check out this presentation and whatnot. So as they join in, let's hang out for a little bit. Let's make sure we got everything. So one of the most important things I want you guys to know is commercial real estate, commercial loans, business loans, everything on that side. So a lot of people have been in real estate and doing residential and whatnot. So we're gonna go to the other side now. We're gonna talk about commercial loans. All right. So let's give it like one more minute and let everybody join in. All right, so um, let's give it one more minute. You know what I mean? We got another minute. Let more people jump in here and listen to the information that's about to be presented to you guys. Um, so if you haven't been to the website, you can go to the website if you want to apply, become a account executive. Go to the website and put in your information as an AE, and then somebody will get back to you. Um, so we're gonna hang tight a little bit here and get let everybody log in and sift in. So, all right, let's get this ball rolling. So, my name is Rick Charles. I'm an account executive with LEY Capital, where we make loans convenient. All right. Um, a lot of guys are in residential real estate, as I said. I want to give you guys an introduction to commercial real estate. Commercial properties are everywhere in our neighborhoods, in our cities, and on every corner. There are probably just as many commercial buildings in the United States just as single family homes. So think about it. So the competition is the same. You just got to decide which side of the fence you want to play on. And most likely just as many commercial real estate loans too. So the big thing I want everybody to know is the commercial business is big business. It's just as profitable as, if not more profitable, as single family properties. So, like residential, commercial buildings are built or purchased with borrowed money. All right. So the whole idea behind that is loans. Okay, you can get a loan for a commercial property. A lot of people don't realize that. Just like you see those guys buying those hotels, those big crazy units, they got a commercial loan to be able to do that, and they're probably paying a monthly mortgage of some sort for that property. So it's the same, almost the same exact thing. But a lot of people, like I said, don't know how to do commercial. And my goal is to bring people on and teach them how to do commercial loans and whatnot. All right. So commercial mortgage. Money borrowed for construction purchase or refinance of a commercial property is commonly referred to as a commercial real estate loan or a commercial mortgage. All right. Commercial mortgages have nothing in common with single family residential mortgages. They are like day and night. So it's like the paperwork is almost completely different. All right. So what you're looking at is two different things. It's like an apple and an orange, two completely different items. All right. And once you understand what kind of juice each one makes and what kind of things you can do, you'll start understanding commercial mortgages. Commercial mortgages are distinct in every way from those who work in the residential mortgage industry. So commercial mortgages is like I said, it's not the same like a residential mortgage. It's never going to be the same. Not everybody can do it. Not everybody is supposed to do it, and not everybody is going to have the opportunity to do it. So understand that if you're in residential and that's your cup of tea, hey, by all means, enjoy it, stay there, do it. But if you're somebody that wants to do commercial mortgages, apply, join our team. We can walk with you through the whole process. All right. Commercial loans are complex. All right. Where you are a novice real estate investor looking for a commercial real estate loan or a residential mortgage broker looking to venture into commercial mortgage business, you need to forget everything you know about residential mortgages. And that's truthful. All right? There are two different animals. There are two different requirements. Even the taxes look completely different when dealing with a commercial transaction. All right? So our job here is to make sure when we take a commercial loan, that complex becomes simple. So understand that when you get a commercial loan, it's not like a residential loan. That's the number one thing you guys must understand. If you want to do commercial loans, a commercial loan is not like a residential loan. All right. So what the banks are looking for a commercial is not the same thing that they're going to look for in a residential. Okay. All right. The terminology for the different kinds of loans. You can get a stated income, full doc, home equity line of credit, good faith estimate, discount points, which are unique to residential mortgages, cannot be found in the lexicon of commercial mortgages. All right, good faith estimate or a HUD. All right, you can get that. So, commercial real estate loan is complex, and it takes several years to master. So, you want to be a student when you come into the commercial arena. You want to be a student because it's completely different. We're dealing with business now. You're not dealing with an individual. Okay? So, what is a commercial mortgage? All right? A loan for purchase or refinance of a commercial property. A commercial mortgage is similar to a residential mortgage, except the collateral is a commercial building and not residential. Okay? So, meaning you're still purchasing or refinancing, but you're not buying maybe a house or a duplex or a quadruplex. You're buying a commercial building. So you might be buying an office building. You might be buying a doctor's office, whatever it is. But you're buying a commercial. All right. So keep that in mind. Okay. So you have income producing versus non-income producing. And what is meant by that? So an income producing property. So let's say you have a office building. You have tenants. They're paying you rent and whatnot. You're making income from that, right? Now, let's say you have that's an income producing property. Okay, so they pay you rent for the offices. You make money, capital. You make money from that. So you have a non-income producing property that qualifies for loans and some that do not. Whether or not a particular commercial property qualifies for a loan depends largely on the type of lender that you're dealing with. Okay? So, every lender is different. Some lenders have hot buttons. Some lenders have a specific type of commercial property that they're looking for. So, you want to keep that in mind. Okay? Lender views. All right? So, some lenders will only look for like apartments. Some lenders will only do office buildings. So you have to be very conscious of what the lender you're dealing for is willing to do the loan for. Be very specific in what they're looking for. All right, whether it's a commercial property or something you can properly describe to the lender you're dealing with. Okay, so you have to be aware of that because there's some lenders that will only do apartments only. They don't want a residential property. They don't want an office building. They don't even want a condo. They only want apartment complexes. If it's not an apartment complex, they don't even want to talk to you. So keep that in mind. Okay. All right. So commercial building. A commercial building is the lender's collateral or security for the repayment of a commercial real estate loan. Okay. Um, the type, condition, age, and size of the commercial building must be described in detail for the lender's consideration. So you want to have a some sort of documentation that's written out talking about the building, what's going on with the building, giving the lender some details about the building. All right. So before you put the deal together, before you put the transaction, you want to take a moment and kind of interrogate, find out as much information you can about the commercial property you're going to do a transaction on. Okay, so you can put that quick guide idea of what's going on, so it can give the lender a great insight on what's being done, what is trying to happen. Okay, you have shopping centers. So there's a bunch of different variations of shopping centers: anchored shopping centers, neighborhood shopping centers, community shopping centers, power shopping centers, small shopping centers, high-end or specialty shopping centers. So there's a variation. So a lot of you guys have probably been to your local neighborhood malls. Those are shopping centers. You've probably been to like those Publix plazas or the Winn-Dixie plazas and whatnot, and they've got all those different stores in there. Those are shopping centers. All right, they do commercial loans on those. When you get those are fabulous properties to get a commercial loan done on them. All right, so let's talk about underwriting. Underwriting a commercial loan. Underwriting a commercial real estate loan is more art than science and is mastered only through years of back office experience. So, in order to be an underwriter for commercial, you pretty much have done residential. You've gone through that, and you've come in and you spent several years working and understanding the commercial loan transaction. Okay, and with that being said, you know exactly what you're looking for when you're looking at a deal. All right. Discipline. The discipline of commercial real estate loan underwriting is further complicated by the fact that not every lender underwrites a loan the same exact way, and that's the same for residential. All right, you have certain guidelines, but the loan is never looked at the same way. Okay, with different programs. So, same thing for commercial. Understand that the loan is never looked at the same way. So, one of the biggest things I've come to find that helps is understanding what the problems are in the loan before you send it off to a lender. When you understand the problems, you can isolate the problems, investigate the problems, and then solve the problems for the loan to make sense. All right? Income producing properties. All right? This is cash flow. All right? So when you have a property that can generate cash for you, okay? This is an income producing property. All right? So income producing properties, a lot of landlords have income producing properties. Shopping centers are a version of income producing properties. Office buildings are a version of income producing properties. They got to be rented though. If they're not rented and you just in the office building doing business, it's not considered a income producing property. Okay. Non-income producing property that doesn't make you any kind of money. Okay, and it may not be owner occupied, so it just doesn't make any money. So you might have a warehouse, you just have stuff you store there, but it's not generating any cash or anything like that. So an example of a uh, non income producing property. So they still do loans on those, but just remember you just have to have the ability to pay for it. Okay? All right? Examples of non income producing properties: you got churches, car dealerships, amusement parks, zoos, truck stops, bowling alleys, daycare centers, marinas, hospitals, convenience stores, cemeteries, funeral homes, business condos, gas stations, auto repairs, and so on and so forth. But the list is here. You can actually take a look at it. Okay. Real estate lenders. Commercial real estate lenders, like landlords, are experts in understanding commercial real estate and the commercial real estate market, and thus willing to loan money to a landlord. Okay, so you have landlords. Typically, if you're renting a property, you deal with a landlord. These guys go out, they buy properties, and they want to put renters in them. So when you have a single family home that you're renting out, you're typically considered a landlord. You're the lord of the land. Okay, so commercial lenders, commercial real estate lenders, do not understand and prefer not to lend money for various businesses that that occupy buildings. All right. So, meaning, what does that mean? So, when a lender doesn't understand their business, they don't understand how you're going to make money, they're not going to give you money. So, the number one rule is clarity. Understand what the business is doing, especially if you're on our side and you're working with a lender for a client. Make sure the client understands there's certain things that need to happen for the lender to be willing to accept the business that they're in that building. Because if the lender doesn't accept the deal, then it's a dead deal, and there's no transaction happening. And then when you have a dead deal and no transaction happen, you have a hurt client. You have somebody that just doesn't feel like they're capable enough to do the transaction. All right? Cash flow. A lot of people don't understand this, and this right here is one of the most important things in your business. It's the cash flow. You can probably go to any bank, they're probably going to wonder about your cash flow. If your business is not cash flowing, they're probably not going to close the loan. Okay? The number one reason that a business has the cash flow is it shows, hey, they're making money and the money is consistently coming. Okay? So if your business cash flows, and they're looking at a lot of different parts, and I'm not going to teach you how to do the cash flow here on this one, but I think down the line I'll do a presentation on cash flow and whatnot, and then allow you to go through it. All right? Income producing single tenant properties: Toys R Us, Walgreens, Best Buy, Costco. These are all stores. Bed Bath & Beyond, Kohl's, CVS Pharmacy, Blockbuster, Hobby Lobby, Dollar General. All these, you've heard of all these stores. You've heard of all of them. All right? They're in a commercial location. They bought it. They own it. Or they're renting it out. You know, you have the opportunity to ask those guys, how would you like to own this shopping center? How would you like to own this plaza? And they'll probably be the most excited group batch of people you probably dealt with. All right? Multi-tenant properties. We're talking about like apartments, things like that. So single tenant, single family, and whatnot, but multifamily, duplex, triplex, quadruplex, apartment complex. All right? Usually occupied by two or more tenants, so duplex, okay? Multi-tenant properties are considered to be much more flexible than single-tenant buildings because they're designed to provide a very variety of storage space and size in proximity to larger anchor tenants. All right. So there are 6 classifications of a commercial property. Okay. Also along with subclassifications are as follows: retail, unanchored, office, downtown, multifamily, apartment, industrial warehouse, hospitality, hotel, motel, special purpose, assisted living, funeral home, stuff like that. Okay? All right, so retail, these are pretty much what you're going to see in there: grocery anchor, shopping center, strip center, community center, big box, and so on. Office, downtown, high rise, mid rise, medical office building, single tenant. Okay. Multifamily. Now, I know a lot of you guys have seen like apartment complexes, buildings like this. Yes, they do loans on those kinds of buildings, if you're wondering. All right, high rise, mid rise, garden style condominium, mobile home. They are out there. They are available. Okay, industrial warehouse, office warehouse, office flex, self storage mini warehouse, light manufacturing, distribution facility. So industrial warehouse, hospitality, hotel and motel, full service, limited, extended stay resort. So once again, it's there. All right, special purpose, senior, independent living, assisted living, skilled nursing facility, R&D, research and development. All right. So when you have these types of properties, one thing I do want to share, and I am gonna adjust that number, and I'm gonna give you guys a different number you guys can call. Okay. The number that you guys can actually call is 561-990-2646. So 561-990-2646. Or you can dial the toll-free number if you're in a different state, different location, 866-203-0021. Or shoot an email, or you can go to the website at www.leycap.com. And with that, you can put an application in. You can reach out to one of our guys. You can send us a message and whatnot. But the biggest thing is you can get assistance. So with that being said, thank you so much for taking the time to listen. And I can't stress to you how important it is for you to take some time and learn. And also, if you need help, or if you're interested in getting a commercial loan transaction done with us, please feel free to reach out or go to the website, fill out the application, and let's get that moving forward for you. So if you have any questions or anything like that, shoot me a message, shoot an email. You can email info@leycap.com, and we'll respond right back to you. All right? Or in the comment box below, you can drop a message, and we'll get right back to you. All right? So with that being said, thank you so much for joining me. I don't want to take up any more of your time and whatnot. And thank you.